A weak competitor set is usually a warning sign, not an opportunity. Beginners tend to think that no competition on a product means that it's a total white space and going to be an easy win. In reality, it often signals deeper problems. It could be no real demand, it could be poor unit economics, or a hidden operational complexity, or it could just be a straight up compliance nightmare. Markets typically don't stay empty for very long unless there's a reason. And if you find a market that's open, you need to do a lot of research to understand why that's the case. A healthy competitor set and what we're looking for has multiple sellers doing stable and good volume, does not have a single seller completely dominating the market, listings that are competent but imperfect, and it also is going to have opportunity for us to improve the product. We're not looking to invent a new category. We're looking to jump into a category that's already stable with a new product and be able to take some of that existing share. There are three main red flags that you might see when you're looking at a competitor set. The first red flag is when there's a massive seller who just completely dominates the market. That seller has massive scale and no other seller is even coming close. They have a huge review count and their unit economics, you're not going to be able to match. If one seller dominates because of scale alone and not differentiation, that's a market I would not enter. The second main red flag is everybody racing to the bottom on price. If everyone's competing at the bottom, the margins are going to be very thin. You can and should reverse engineer your competitors' margins, but entering a market with low margins is not something that I would recommend. The third red flag you might see is over optimized listings without any place for you to differentiate. The listing's clear, the reviews are strong, there's no repeatable execution failures. You have to ask yourself, how can I actually differentiate against this product? Another thing we should be careful about is that weak listings do not always mean opportunity. Sometimes weak listings are weak because people just don't care about it that much. They don't care enough to leave reviews. The product isn't repeatable or reorderable. When you're looking at a competitive set, the question you should always ask yourself is, why hasn't someone already fixed this? If the reason is obvious and easy to solve, like execution problems that are easy or product improvements that can keep you on the same cost structure, or even just expectation mismatches, these are good opportunities for you. If the gap is structural and expensive, it's typically not an opportunity, it's a warning. It could be a regulatory hurdle, complex manufacturing, expensive materials, a high defect risk, or high amount of returns. When I look at a competitive set, I like to apply the good, better, best framework. When we look at a listing that falls into the good category, this listing is just okay. These listings are pretty generic. They're going to have bizarre brand names, bad AI images, weird English phrasing. A lot of sellers competing at this same price point. You as a consumer are probably not going to trust these brands. You might still buy because it's something that you do not care about, like a spatula, for example. Let's talk about the best product category. These are the high end brands. You know these brands. These brands spend a lot of money on marketing. They're going to have really dialed listings, native English, real product photos. They're going to be the highest price point in the market. These brands also have high overhead, and that is going to leave opportunity for us. As a US based Amazon private label seller, I am a firm believer that the upper layer of the better tier is where you need to be. This is where my products live and where I've had the best success. Basically, we're going to look at this best product and take a step down version and make it slightly more affordable. We don't have a huge overhead like those best brands do, and that's going to let us still have a good margin at a lower price point. We may downscale some of the features, but the goal is to still have a really high quality feeling product and experience. Never ever get close to the good level. You will not and cannot compete with the overseas sellers. The sweet spot for a US private label seller is typically the upper layer of the better tier. We're going to use this pricing to inform what the back of the envelope math is on our margins from video 5. Once you've checked all these boxes and understand your competitive landscape, You know your margin math works out. You know what your target cost is going to be. You know there's demand. You have some ideas on how to differentiate. The next step is going to be doing supplier research and figuring out which supplier you would actually want to build this product with. That's what we're going to talk about in the next video.